If you have ever taken a trade like this, the price smashing your SL, then running low and hitting your full take profit in the market, is because you haven't really understand the liquidity sweeps and the liquidity in the market. In this very video, I'm going to explain to you guys how the liquidity is being swept in the market. I'm going to explain to you guys everything about liquidity in the market. The price rally went up, hit your stop loss, then go down to your full take profit. Now it's because you don't really understand these liquidity sweeps in the market. Now, if you have done this, your friends have done this, I will advise you watch this very video till the very end. And after watching the video, share the video with your friends, so your friends doing this type of thing, doing this type of trade or taking this type of trade will avoid it, will know how to avoid this type of trap formed in the market. Right now, in this video now, I'm gonna break liquidity down in the simplest way you guys are gonna understand it. Sniper gang, welcome back to the video. Right, in this video now, these are the 4 things I'm gonna teach you. Right, the first one is what is liquidity. Right, then the second one is where is the liquidity in the market. Then how is this liquidity swept? You can know how it's been swept so you can avoid it. Then the final one is how to capitalize and how to trade this liquidity sweep. Right, like I said, in this video I'm going to explain liquidity so that you guys can understand it and avoid being a liquidity to the market. Right now, if you are new here, you are highly welcome, and I will advise you hit on the subscribe bell. Right, hit on the subscribe button and turn on the notification bell so you'll be the first person to get notified anytime I drop videos like this. You know what we always do? We don't waste time. Let's jump right to my chart now. Let's begin our analysis. Right, simple and straight up. Right now, once you're able to watch this very video to the very end, you will be more advanced in trading. You will be a sniper trader just like myself. So let's begin. These are what I'm going to be teaching you in this very video. So the first one is what is liquidity. Then where is liquidity? Where does the liquidity lies? Now, how is the liquidity being swept? Right, then how to trade and make profits trading these liquidity sweeps. Right now, it's a very simple topic, right? People complicate it online. You know what I always do here, right? I keep things simple. Right now, what is liquidity in the market? If you hear the word liquidity in the market, it simply means money in the market. Liquidity is just money, right? If you hear me saying liquidity, I'm saying money. If you hear me saying money, I'm saying liquidity. Right now, liquidity in the market is this. Right, in every single broker, in every single exchange, there's a pool of liquidity. Right, in any exchange you trade on, let's use Exness for those trading the forex market as an example. Both crypto market, this same thing happens. In crypto, like your Bybit, they have a pool of liquidity. They have a pool where if you buy, let's say you buy Bitcoin, they're going to remove the liquidity from this pool. If you click on buy, they're going to remove the liquidity from this pool to buy Bitcoin for you. If there's not enough liquidity in this pool, there's going to be a seller in the market who is selling to you. Right? Let me put it this way. If you click on buy on the exchange, Bybit, any market you trade, both the stock market, there's someone out there who is selling. And once you click on buy now, since the person is selling, they will just transact it and exchange it for you guys. That's what the exchange does. But if there's nobody selling, they're going to take liquidity from this their liquidity pool. So if those big banks, those big instrument traders, if they want to enter the market, they're going to need enough liquidity to enter into the market. Now, if big traders now, like the Wall Street, if they click on buy, right, let's say they click on buy with, let's say $10 million, and nobody is willing to sell $10 million worth of a currency to them, let's say GBP, nobody is willing to sell $10 million worth of GBP to them. And if they go check out the liquidity, or they click on buy and the exchange is not able to find somebody willing to sell, and there is no liquidity in the exchange liquidity pool, right, they're going to manipulate the market in order to get liquidity to perform the trade for that very individual. Right, no matter how the market gets liquidity, it's going to grab liquidity by hitting stop loss of traders in order to get liquidity into this pool, so that those people who are buying with large sum of money will be able to buy into the market. Let me explain it in a way you guys are going to understand it. Right, if there's always a liquidity pool in every single exchange, right? Every single exchange has a pool of liquidity, which once you buy, they are going to take the liquidity from the exchange. If you hit full take profit, you are going to take liquidity from their liquidity pool. If you hit stop loss, you're going to provide liquidity into this liquidity pool. That means you lost money into the market. This liquidity pool is like the market. You lost money into this liquidity pool. If you take profits, you make profits from this liquidity pool. So also it is. If those exchange wants to buy, is either someone is out there selling to them or they are buying from this liquidity pool. If there's nobody selling to them and there's no enough liquidity in this liquidity pool for them to buy from, they are going to induce traders to stop them out of the market and provide liquidity into this liquidity pool. So that's the simplest way I can explain it. I believe you got that aspect. Now, that's simply what liquidity is in the market. Money needed to perform trades. Money, just money in the market. That's what liquidity is in the market, both the forex market, crypto market, or the stock market. Right? Now, where is this liquidity? I believe you don't know what liquidity is. Now, where is this liquidity? So many liquidities in the market always lies on highs and lows in the market. Below any low, there's always a liquidity. Below any support level, there's always a liquidity. Be above any high or above any resistance level, there's always a liquidity right there. I'm going to show you so many examples and show you how I do this and how I trade this, right? There's always liquidity below highs and low. Then the second area you find liquidity is always on trend line. There's always liquidity resting below trend. Resting below trend line. Now, you don't know where liquidity is in the market. Above highs, liquidity is always above highs and below lows, right? Then always resting below or above trend line. You know, if the market is bearish now, you draw a trend line at the top. So there's always liquidity right there. If it's bullish, draw a trend line at the bottom. There's always liquidity below that very line you draw. So now every single trend line now has liquidity. Every single lows now in the market has liquidity. Now let's go over. Let me start showing you how to spot this liquidity sweep. I believe you now know where liquidity is in the market, right? You know what I do here, I keep things simple. So if you want to get simple things like this, subscribe and turn on the notification bell. Right now, where does this liquidity lies in the market, or how is this liquidity swept? Right? How does this big bank sweep this liquidity? Now they sweep this liquidity by creating inducement in the market. They create inducement in the market. Now, many of you don't know what inducement is. Inducement is how liquidity is being gotten. You know what I said earlier, and I remember telling you guys about what liquidity is. Then I drew a liquidity pool where people can buy from or people can sell into. Right? Now, for people to hit stop loss and the liquidity coming into this liquidity pool, the big banks, big traders, institutional traders, they're going to create inducement on the chart. Inducement now is not going to make people hit stop loss and now provide liquidity into this liquidity pool. Now let me explain it in a way every single one of you is going to understand it. Right? Now, this is what an inducement is. Inducement is a trap or a fake out that's going to make you take trade. Right? Now, let me show you just a clear example. Let me put something like this. Now, many traders now who trade with any strategy you are using, I'm going to teach you different strategy on how to trade this liquidity. Now, many traders now they're going to mark out this area now as probably those who trade the order block. They're going to mark out this level now as their order block. Then, if you notice, the market created this low, and sometimes this low can even go up and then break structure, and then go up and break above this previous high. Now, breaking above that very previous high, now people are going to start marking out this level now as an order block or as their demand level again. Many, they've already marked out this level as a demand level, but they will not start marking out this level at demand level. Now, this is an inducement to make you think this is a demand level and make you start longing from here. If you now long from here now, you get stopped out and you now provide liquidity into the market. It's just a fake out. Let's put it another way. It's just a fake out that's going to make you take trade in a point where you're not supposed to take trade. Now, if you take trade from this first demand level now, you hit stop loss, meaning this second demand level is the demand level you should be trading from. But since you don't really understand the liquidity, you start trading from here. You don't really understand the inducement traps in the market. Now, The other aspect of liquidity is always highs and low, like I said. Now, how is this liquidity swept? Above any high, there's always a liquidity. Now, many traders, since a high is a resistance, they're gonna want to short from the resistance level. They want the price to come back to that resistance level and they short. Now, many traders, they're gonna wait for the price to break out of that resistance level, then they long. So liquidity is always resting above and below this point. There's always liquidity within this range in the market. Now, support and resistance traders, they want to short from here. Stop loss above this level, target the next low. Then breakout traders, they want to long from here because they feel the price, once the price breaks out of this resistance level, it's going to continue buying. Then they want to place their stop loss below it. You can see now we now have two-sided liquidity. There's liquidity right here, there's liquidity right there, there's money right there. And if the price is able to successfully hit stop loss of these traders, now it has provided liquidity into the market. If it's able to hit stop loss of those sell traders, now it has provided two-side liquidity into the market. Now, how do you trade this? I believe you now know how liquidity is being swept. That's simply how liquidity is being swept. It's just going to induce traders. Some traders are going to start saying different patterns, like the W pattern, M pattern, and they'll start thinking, oh, reversal is about to happen, right? They'll start saying change of character, but they don't really know what is going to make a change of character valid. They're going to start thinking, oh, reversal is going to happen. This is a valid zone that I'm going to trade from, right? You will start losing trade if you trade that way. Now, guys, I have a mentorship program where I teach students how to trade. If you love the way I explain things, you love the way I teach, you want to join my class and then learn how to trade like a professional directly from me, there's a link in the description so you can join. Now, take a look at the trade we took today, right? Take a look at what we did today. This is just live. I did it in my group. For those in my group, you already know what I'm saying. Now, take a look at what I did. I said, sell GBP USD now, right? I sent out the screenshots. Sell GBP USD now. Now, I noticed that the trade was not going well. Then I said, not going well. Then I sent the screenshot that the trade was running in loss. I don't hide things, right? This is today. I'm recording this video on Friday. I don't know when the video is going to come out, but I'm recording it on Friday. Now, I said, okay, sell this currency now, and it was not going well. Then I sent it to the group. It's not going well. Then when I redo my analysis, then I noticed that the market was just going to go up to sweep liquidity. The initial direction of the market is down. It's just going up to sweep liquidity because I've actually mastered these liquidity sweeps, liquidity traps, inducement traps in the market. Now I was able to actually say, okay, not going well, adjust your SL. And I said, adjust your SL higher. Meaning we should not be liquidity. The price should not hit our stop loss, then start going down. Because I know what the market wants. So I send out to the group, adjust SL to this. We increase our SL in the market. Now, the next thing, notice what I did. I said, always pay attention to everything I do here. I said, adjust SL. Market went up to grab liquidity. Now, market went up now, grab liquidity in the market now. Since we adjust our SL, if you notice this trade now, we were not stopped out, but we were close to getting stopped out, right? But we are not stopped out because I spotted that and we adjusted our stop loss. Then I can never be a liquidity because I now understand it. If you don't understand it, you will keep losing trade, right? Now, the next thing now, you can see the screenshot I sent to the group. The trade is running in some crazy profit now, over 30 pips profit, right? Now, we reached just 25 now. We didn't hit stop loss. Now we are making 30 pips profit, right? Imagine I don't understand this liquidity. That's how I would have just allowed the trade to remain and we hit stop loss on that very good trade. Now, that's simply how liquidity is being swept. They're going to induce you to start thinking, this is where the market is going to go. Every traders now, they will start buying because they feel, okay, the market now is going up. But me, since I already know how it is, I already know what the market is going to do, then I said, adjust SL. Every traders now, they'll start panicking, they'll start closing out on positions, right? So that's by the way. Now, how do you trade this liquidity in the market? How to trade this liquidity? Now, to trade this liquidity is simple. What I do is I mark out highs, mainly 1 hour time frame highs. Highs on a 1 hour time frame, highs and lows on a 1 hour time frame. That's mainly the ones I mark out to actually start trading this liquidity, or what I use to spot and trade this liquidity. I mark out highs and lows on a 1 hour time frame. Then if I mark out any high, so this is a high, let me remove all of this drawing. I believe you guys are following. So if you are feeling good, you are understanding me, you want to learn directly from me, there's a link in the description, join classes. So now, this is a high, this is a 1 hour time frame high, this is a high point on a 1 hour time frame. There are so many liquidity concepts, liquidity entries, sniper entries you should know, right? My students are the only ones who are gonna know that, right? Now this is a high on the market, right? And this high now is a 1 hour time frame high. You can see I'm on a 1 hour time frame, and this is a high on a 1 hour time frame, right? This is a 1 hour time frame high. Then I already know, okay, there's a liquidity resting above this high, so let's indicate it. Let me just indicate it right here and then mark it out as there is liquidity resting right there. When I was doing the analysis earlier, when I sent out the signal, we were on a live class, right? We were on a live class when I sent out the signal, so I didn't really check for this liquidity, right? Then the next thing I noticed, then I took the shorts, right? We're on the short directly from this point, but when I noticed this 1 hour time frame high, I said adjust SL. Now what you do and how you trade this is simple. Once you identify this 1 hour time frame high, the first thing is, first you identify the 1 hour time frame highs and lows. This is a low point on a 1 hour time frame. This is a low on a 1 hour time frame, right? I'm going to give you my rules on how I trade this. This is a low on a 1 hour time frame. So this low now is also a liquidity, right? It's also liquidity in the market. Now, how you trade this liquidity is simple, right? Once you mark out your 1 hour time frame high, the next thing is you wait for the price to break above that high to sweep all the liquidity. Before you start taking trade, there's always high. Every high now, this is a low point, and this is a 1 hour time frame low. But why are you gonna call this liquidity? This is a 1 hour time frame high. How are you gonna call this liquidity? You can start seeing all of these highs. Not all of these highs are liquidity, right? Now, how do you know if this is a liquidity that's gonna be swept? Now, to know if this liquidity is gonna be swept, the first thing is the market direction. The market is bearish. The initial move of the market is bearish. Now, I already know, okay, where the market is going now is this low right here. This is where the market is heading. So now I already have an edge over the market. I know that the market is going down to this very point, but I don't know how it's gonna do it, because I don't know how it's gonna do it. If it's gonna pull up first before going down, that's none of my business. But since I already marked out this liquidity on a 1 hour time frame, I then go down to a lower time frame. Now, in the lower time frame, now I wait for a sweep above that very high of the 1 hour time frame, right? I wait for a sweep above that very high. So now let's see what the price is gonna do. I wait for a sweep first before I start taking trade. If you notice what the price did, these highs and markouts now can be a resistance. This 1 hour time frame can be a resistance. It can be previous day high, it can be previous day low, right? Now, once the price sweep all the liquidity, you can see how the price breaks above this very point. You can see with this tiny move now, this tiny move was what was going to stop us out of that very trade. But since I was smart, I know what the market wants, we took the trade immediately. The price sweep the liquidity resting above this high. Initial direction is bearish, so you put your stop loss just slightly above the liquidity sweep. You're not going to hit stop loss anyway, so you just screw down, set the target at any point. You can see your stop loss is always very, very small, and the target is always very good, with a good and a perfect risk to reward ratio. Now let me give you my rules on how I personally trade this very strategy. Now you can see this trade is showing me some crazy profits right now, and I sent out the group the signal straight up to my group. The link to my group is in the description for those who are not there. Let's check out another example. Let's check out about 2 more examples, then we end the video. Simple. If you want to be like me, you want to trade the way I trade, there's a link in the description. Right now, if you notice, this is a high, and this high is on the 1 hour time frame. Right now, once I mark out this high, now what am I waiting for? I want the liquidity to be swept. Now, SMC traders, right? SMC traders, smart money concept traders, other block traders are gonna feel, okay, this is a break of structure. A break above this high is a break of structure. It's also okay and it's fine. If you notice, I call this a liquidity sweep. With this strategy, I also trade a smart money, so I call this liquidity sweep, breaking above this 1 hour time frame high. Then what's the next thing? I now scale down to a lower time frame to start looking for my trade. Now I'm waiting for a break above that high. Look at where the break happened. Immediately the break happened, now I'm taking my sell from that break, right? Stop loss above the high. Then my target now is always the low. So if you notice, stop loss above this very high right here, above the, after the liquidity sweep above the high, then target, this is the nearest low on this price. So this low now is going to be my first take profit. Then there's another low right here. This second low, my full take profit. So let's see how this trade is going to play out. Simple and easy. So you can easily see with a very tiny stop loss now, see what the price did. Literally smash first take profit, now still moving down to second take profit. Right? Simple, easy, and straight up. You can easily see this clearly for yourself. Right? Now let's take another example, then we end the video. Let's go to any other forex pair. Let's go to Euro USD. This strategy, this liquidity sweep works on all markets. So I'm currently seeing another liquidity sweep directly on this Euro USD. Right? Now if you notice Euro USD, there's some sort of resistance right here. This 1 hour time frame high. There's a 1 hour time frame high at this point. I don't know if you are seeing it. Right? There's a high right here on the 1 hour time frame. Let me zoom in. 1 hour time frame high. Also, the NZC already indicated this as a change of character, meaning this change of character happened now is also like a liquidity sweep for me. Breaking above that high, a liquidity sweep, then I'm waiting for a reversal. Right? Now, there are some reversal patterns that's going to form. Immediately the price breaks above that very liquidity sweep high, there's always a reversal pattern that's going to form that only my students are going to know about. Right? You yourself now, I'm teaching you in a way that you will go over and start practicing it, learn, and then start using it. Make sure you master it before you start using this very simple liquidity strategy. Now, for my students, you already know, I've already taught you guys about the reversal patterns. Right? Now, this is a high I marked out. Right? And what did I call this high? It can be a resistance level for the price. And you can easily see clearly for yourself now that this level has been a resistance for the price. For some time now, the price has been respecting these very highs, this very level. Now, many traders now, what did I say? Many traders, they want to short from here. Once they short from here now, you know that supply is always above it. Then the target is always the next support level because this is a resistance. You can see how the price really smash SL and then start moving down. Now, to avoid this, you wait for this type of liquidity sweep. Immediately the price breaks above that very 1 hour time frame high, then you take your sell from there, set your stop loss above the high. Then target is always the lowest point. So this is the low, nearest low right here. So let's take this very trade now. So the liquidity sweep has happened, the price has broken above the high, then this is the nearest low right here. I can zoom into the price now, and then I'm seeing this other low. There's another low right here. So this is the second low. My full take profit is gonna be that second low. Right? Simple. Let's see how this trade is gonna play out. You can see with a very tiny stop loss now, about 6.2 pips stop loss to win about 39 pips take profit. That's the exact same thing I did today on my trade. So see this for yourself. 40 pips smash instantly. As you see this clearly for yourself. It's easy, simple, and straight up. Right? Now, if you want to be like me, trade like me, there's a link in the description to join my class. So that's by the way. If you are new to this YouTube, I believe you've seen the video, you've seen it all. You've seen how we do things. So subscribe. This is the trade we are on. Right? This is the trade we are on GBP. We are currently up about 23%, about 23 pips. Currently up about 23 pips. Now, if you want to get signals from me, signals are free. There's a link in the description. Join the group. Right? If you want to get more videos like this, subscribe and turn on the notification bell. If the video was helpful, like the video, share the video with your friends so your friends can avoid being a liquidity to the market. Right? So I'll see you guys in my next video.